Granoff Chapter 1, Part 4, Comparison of State and Local Government, Not-for-Profit Entities with Business Entities. Coverage: Characteristics that distinguish governments and not-for-profit organizations from businesses. Business sector goal is to earn a profit. State and local government and private not-for-profit entities have other objectives. Different missions. The goal of government and not-for-profit is to provide services for the betterment of society. The goal of business is to earn a profit. State and local government and not-for-profit entities. No direct and proportional relationship between resources provided and the benefits received. Absence of transferable ownership rights. Neither state and local government entities or not-for-profit entities have defined ownership interest like those of businesses. Should the SLG or the NFP entity be dissolved, there are no owners who would receive the residual. Let's look at the basic accounting equation. We're all familiar with the for-profit based businesses. Assets equal liabilities plus equity. For governments, the accounting equation is assets minus liabilities equal net position. Thus, net assets equals net position. However, you have to be careful with each chapter and with each type of financial statement to make sure that you understand the residual. When we cover the 5 governmental funds, we will find that the residual is called fund balance. For state and local government entities, the budget is very important. The budget is the culmination of the political process. The budget is the key fiscal document. Budgets drive accounting and financial reporting. State and local government and not-for-profit entities. Revenues may not be linked to constituent demand or satisfaction. No direct link between revenues and expenses. Less distinction between internal and external accounting and reporting. We have to ensure inter-period equity for most state and local entities. State and local government entities. Inter-period equity, the concept that constituents pay for services they receive and not shift the burdens to their children. There is a separate video that covers inter-period equity. This is perhaps one of the most critical concepts of Chapter 1. Resources that may be restricted for particular activities or purposes use fund accounting, covered in Chapter 2. Examples: restricted resources, federal government grants for low-income housing. State gasoline tax may be targeted by law at highway construction and maintenance. State of Texas Rainy Day Fund. These are all restrictions for particular activities or purposes.